Good morning, everybody. This is Eureka John, Eureka Street Crypto Hub, coming at you February 15th, 8:02 a.m. This morning, I'm going to do a video of my other format, not the morning news, but a video about a specific project. And this project is going to be about Synthetix. Synthetix, right here. And there's the Synthetix logo. Well, with my little alteration on there, and then there's me, my goofy ass, sitting there in the chair. I do videos in two formats, the news and then specific project focus. And I do these videos surrounding specific projects, one, because I like researching these tokens and all the different things that they do, and then two, it helps me to learn how to talk about this stuff, and it motivates me to kind of learn the language surrounding it, and just being able to somewhat articulate what's going on with all these different projects and why we're seeing this crypto explosion and this fourth industrial revolution. Anyway, so yeah, the Synthetix. Synthetix is not your entry-level token. Let me get this out of the way and get this up here. Here's their website. Synthetix is based on derivatives liquidity. It's the backbone for derivatives trading in DeFi, allowing anyone to gain on-chain exposure to a vast range of assets. So this is not just somebody trying to create a cryptocurrency, and this is not trying to replace cash or create a digital gold or anything like that. This is purely for the financial person, and for somebody with a financial background who knows finance and knows derivatives and knows and is a trader, and that all that is not me. I come from a liberal arts education background, still owe a bunch of college debt from years ago that I'm working on. I did an undergraduate in Spanish and religion double majors, and I did a master's in religion, so finance is like a complete world apart. I'm not a practical person, but I've had to make myself be and learn how to hustle, and the crypto world has really appealed to me a lot and in so many ways. So here I am now studying Synthetix, and this has been such an interesting, eye-opening project. I've had to start from square one. I've had to learn what a derivative is. And at the very beginning of all this crypto research, I've had to learn what money is. What's the definition of money? Now that is right down my alley, learning the philosophical fundamentals of all this stuff. And I picked up a Tony Robbins book called Money, and I read it, and I learned what all these basic forms of money are: T-bills, stock options, all these IRAs, what all this. I had no idea what this stuff was. And then I've been getting into reading Robert Breedlove as well. He's a guy that takes kind of a philosophical approach to cryptocurrency and Bitcoin, and he writes a lot of books about what's money, what's Bitcoin. He has a blog. I'd recommend following him on Twitter. He's definitely got his head on straight and has a very eloquent way of speaking about cryptocurrency and Bitcoin. So anyway, back to Synthetix. Synthetix, let's see. Okay, before we get into Synthetix, let's figure out what a derivative is. And Capital.com has some really good videos on what Synthetix is, and here's a bunch of their videos. What's leverage, what's a bid-ask spread, what's a commodity, liquidity, what's a CFD, contract for difference. And it's a really great fundamental website to learn about a lot of these terms on their website. I don't know what else they do. I haven't really, I've just watched their videos, but let's learn what a derivative is. What's a derivative definition? Financial derivatives are contracts that derive their value from the market performance of an underlying asset. Instead of the actual asset being exchanged, agreements are made that involve the exchange of cash or other assets for the underlying asset within a certain specified time frame. So there's this video here, and it kind of explains it, but I'm going to explain to you in my words of one form of a derivative. Okay, I work at a hose plant, and I'm in sales there, and I have customers all the time asking me for a contract or some kind of an agreement that we will freeze prices for a year and up to a certain time frame. Okay, well, the hose is made out of PVC. Our price of our hose hinges upon the price of the PVC that we get from our vendors. Okay, say for instance we have a very volatile year like we did this last year with COVID, and it's still going on, and the price of that PVC shoots through the roof. Well, if I agree at $5 for a hose and the price of PVC raises that price to $10, then over a year's time, and I have this frozen in agreement with this customer, well, I've lost my ass on that hose. And same thing though, however, if the price of PVC splits in half and then the price of the hose at that profit margin goes down to $2.50, but we've set the price at $5, then I'm banking. So it can work both ways. It's a way for people to hedge their portfolios against any type of dramatic price fluctuation, and it's also a tool of speculation, which a lot of people say is the reason for the 2008 financial crash. People speculating on all these housing market contracts and all that stuff, and that goes way over my head, but I can see how that can be an issue and could cause an entire market crash. Warren Buffett called them the weapons of financial weapons of mass destruction. So yeah, I don't know. It seems a little dramatic, but after the 2008 stock market crash, not so much. And everything that's going on right now with the Fed and the just non-stop printing of money, yeah, we're headed for some major issues, but people are still playing with all these derivatives. This video here, here's some of the different types of derivatives: options, futures, forwards, swaps, CFDs. I don't really understand CFDs still, but options, futures is kind of what I explained, futures and forwards. And then options are this whole GameStop thing, about people, a lot of investors and hedge fund investors were betting on the fact that the GameStop stock will basically fall. And GameStop being the most innovative company, and with all the digital downloading of games, seemed pretty reasonable, right? Well, the people on Reddit decided to rally for GameStop and buy a ton of GameStop stock, and the price of the GameStop stock went up. So whenever these puts on there, these predictions that the price would fall, and their bets and the hedge funds bets on that failed, they lost a ton of money, and that shook the market. And they were doing this with AMC theaters. They're doing this with silver right now. It's called a short squeeze, and a lot of these big rich guys are losing a lot of money, and it's causing some issues. So that is the danger of these derivatives. And derivatives, they have some ancient roots. Let's see here. History derivatives. One of the earliest examples of what we would today consider financial derivatives was in ancient Greece and involved the philosopher Thales, a student of Aristotle. Thales was an adept meteorologist and made a prediction based on his observation that there would be a bumper olive crop that year, bumper being bountiful. He was so confident in his observations that he decided to purchase many of the olive farms in the area surrounding Athens before that year's harvest. It transpired that Thales' prediction was correct. That year's weather conditions gave way to a bumper crop of olives, and it made him a lot of money in a very early version of what we now call a forward contract. So, that's one example. So this is also interesting too. In the 19th century, U.S. farmers were having problems finding buyers for their commodities. To solve the issue, a joint market was set up in 1848 called the Chicago Board of Trade, the CBOT. It soon evolved into the world's first derivatives market, whereby instead buyers and sellers negotiating their own bespoke contract between themselves, standardized contracts, which anyone could buy and sell, were introduced and listed on the board's exchange. In 2007, the CBOT merged with the Chicago Mercantile Exchange to become the CME Group, and is still one of the world's foremost derivative markets. And so these markets of people buying and selling contracts back and forth to each other can kind of breed a cesspool of pretty much what happened in 2008. People were buying and selling all these mortgages back and forth to each other, and it just ended in disaster. So that's that. Anyway, back to Synthetix, the whole point of this video. Synthetix, so CoinGecko always has a little synopsis underneath the token, and they actually have a really long one for Synthetix, and they have a video here with the founder of Synthetix, Kane Warwick, right there. And this is a good video if you want to hear it all from the horse's mouth. It's kind of an old one, but a good one. Hold on, real quick. Let me shut this. The sun's coming out. It's been freezing here, and we're in a kind of a state of disaster right now. So hold on, let me shut this curtain. And okay, I think that's a little better. Anyway, so yeah, this is the founder, and where was I? So anyway, CoinGecko posted this video, and they did a little synopsis of what Synthetix are. This one's good, and let's see here. Gemini does a really good one. I think it's the most brief, clear, and concise one that I've found of a summary of what Synthetix is. So go to Gemini.com, Cryptopedia. And then we have Masari is always a really good resource to research your tokens with. Synthetix is at 2508 per token. It's incredible. And they have the links to the white paper, the light paper, their Twitter, their website, the Telegram group, their Discord group, which is really active. And a lot of governance has been going on there. GitHub and their Reddit, and there's an AMA here. GitHub is, for those of you who don't know, it's kind of a code repository where developers will put their code here and their contributions and the source code for a lot of the projects. And as you can tell, there's a bunch of stuff on here. It's a great way for you to build a name for yourself as a developer, to build up and put your work on GitHub on different projects and links to it. So people who are interested in hiring you can see what you've done. So Synthetix has a very active GitHub. And yeah, so back to the Gemini one. I'll go off of this one for right now. So Synthetix is an Ethereum-based protocol for the issuance of synthetic assets. Analogous to derivatives in legacy finance, synthetic assets are financial instruments in the form of ERC-20 smart contracts known as synths that track and provide the returns of another asset without requiring you to hold that asset. So what that really means is basically there is a token, the SNX token, built on top of the Ethereum platform. It's an ERC-20 token, and that token represents the price of another asset, whether it be gold or Bitcoin or silver or Apple stock or Tesla stock, and it allows you to trade on that exchange those type of assets back and forth with no friction, meaning you can trade Tesla stock with gold, with Bitcoin, back and forth as if they aren't completely different asset classes. You can trade Bitcoin with Ethereum, with Cosmos network or whatever, even though they're all completely based on different blockchains, back and forth with no issues. So it allows that, and it allows no slippage, and slippage is basically price slippage by the time you put in your order, by the time the order is fulfilled, and there's no slippage there. So yeah, there's a lot of benefits to working on Synthetix. Let's see here. So let's see, Synthetix is an Ethereum-based protocol for the issuance of synthetic assets, which is basically they bought with the SNX token. So for instance, SUSD is synthetic US dollars, and that is a token that is pegged to the US dollar. Synthetic AUG is synthetic gold, and that is a synthetic token pegged to the price of gold. Synthetix Tesla, that's a synthetic token pegged to the price of Tesla. Analogous to derivatives in legacy finance, synthetic assets are financial instruments in the form of ERC-20 smart contracts, known as synths, that track and provide the returns of another asset without requiring you to hold that asset. You can trade synths, which range from cryptocurrencies, indexes, inverses, and real-world assets like gold, on Quinta, Synthetix decentralized exchange. Now, Synthetix was it was one of the first DeFi platforms I tried to work with, and I just did it honestly because I liked the name. Then I learned how to work Aave, which was a little more approachable. But I just kind of completely aped into it, and I tried to figure it out. And I did. I put in like $100, and I learned how to work the levers and pulleys and what they do, and I'll go into that here in a second. But it was super confusing at first, and I just had to go in there and just try to figure it out. However, it's not meant for the person with $100. It's not meant for the new person. If you're new, stay away from this project. Learn other things first. Learn about Bitcoin, learn about Ethereum, even learn about Cardano. There's tons of other different projects you can learn about before Synthetix and learn about finance. So if you're new, stay away from this project for the time being and come back to it later. And then once you can understand how the Ethereum platform works, Web 3.0 works, and all that stuff, then you can fully jump into this. But learn all the basics of MetaMask, Web 3.0, of Ethereum, what all these tokens are first before you jump into Synthetix. This is not financial advice, but this is just trying to keep you from jumping into a financial train wreck, because to do transactions on Synthetix is expensive. You have to burn tokens, mint tokens, you have to trade them, you have to buy SNX token, and all those require Ethereum fees. And right now, Ethereum is not the most economical to do things on. And they're coming up with Ethereum. They've come out with Ethereum 2.0, and things are slowly being migrated to allow for that. And Synthetix is coming out with their 2.0 layer as well. Hold on, let me get to it here. Let's see here. Let's go into staking, and okay, let's go to the home page right here. Okay, so migrate to layer 2. Okay, so there will be a place for us in the future, for us little guys, to do stuff on layer 2, but right now to do anything on layer 1 can be really expensive. But if you have a lot of money, then it can be super profitable. And so I'm giving myself some time. As you can tell before, I have a $1.07 left on this platform, so it's not exactly like I'm banking, but it ended up costing me too much to do any type of transaction, and I was just like, this is not worth it. And this was last May of 2020 when I was doing all this, so I was just like, all right, I'm just gonna back up from this for the time being. But anyway, it is a really good platform if you have a good chunk of money to do it. So Synthetix use decentralized oracles, basically Chainlink, which are smart contract-based price discovery protocols to track the prices of the assets represented, allowing you to hold and exchange synths as if you actually own the underlying assets. So using Chainlink, which is an oracle which connects price feeds to the blockchain, so they can take any type of asset, as long as there's a market for it, and connect it via Chainlink, the fluctuating price of that asset, and put it on Ethereum. And that's how that works. So I'm going to say, for instance, baseball cards. If baseball cards were completely fluctuating up and down and there was a huge market for baseball cards, well, there could be a synth for baseball cards. And then also what's cool about Synthetix, it allows price feeds for entire umbrellas of assets. So they have one for DeFi. They put a bunch of different DeFi instruments into a basket, and then you can bet on the overall price of all those instruments, or centralize the pricing of centralized exchanges as well, like Gemini, Kraken, Coinbase, Binance. All these are very different centralized exchanges, but they all have their own tokens. I don't know if Coinbase does, but they take the average prices of all those tokens and then the market as a whole, and you can bet on the centralized exchange market. Let's take a quick look. I did have something up that kind of shows. Here it is. No, this is about SCCP. This is a Spartan Council. We'll get to that in a second. That's Haven. That's the original one. Synths. No. And okay, there's Quinta. There's this. There's the governance. Token tax, and we'll get to that. There it is. Okay, so I can't really find this right now. Okay, here we go. SCCP 77. So, for instance, what I was talking about, this, you can bet on umbrella markets. It is proposed to update the composition of the SDeFi index. That's what I was looking for. You can get synths for complete indexes. And so right here you have, they're adding in SushiSwap, 1inch, and Bancor. You have an index of all these DeFi protocols, and here's the weight of each one of them when they take the average of all that, and that is the price that you can buy a token, the SDeFi token, representing all that. So it kind of gives you a little insight into that. Anyway, that's getting into the weeds a little bit. Let's go back to square one here. So here's how Synthetix works. You purchase ETH on an exchange, you exchange ETH for SUSD on Quinta, then exchange other synths such as BTC, or you can obtain SNX tokens on an exchange, stake them on Minter, a decentralized app created by Synth, and then create synths and begin trading on Quinta. So what does all that mean? Okay, so let's go back into here. First of all, let's go to right here, staking. And you have to be able to mint US dollars, so you have to get SNX first. All right, so let's go into SNX. Let's go stake SNX. So you can't stake them unless you buy them first. You got to have SNX. And you can also stake your ETH as well, but that's something new. We'll just start with the basics. Things have changed a lot since last May. I have my Coinbase wallet connected right here with 0.06 ETH on it. It takes you to the 1inch exchange, and you can buy SNX on the 1inch exchange, and it will go into the MetaMask or the Coinbase wallet or whatever type of wallet you have connected with it. And so once you've bought your SNX token, then you can go back to the Synthetix website. All right, so you go in and you stake your SNX. And SNX is the collateral. So instead of the Synthetix platform having physical gold or Apple stock or Tesla stock or Bitcoin, you stake your collateral, which represents of SNX token, which represents all that. And that's how they back all that stuff. So hold on, let me take a drink. I'm starting to lose my voice. Anyway, so you stake your SNX token and you get SUSD in return. Now you have to maintain, I believe it's a 600% collateral rate, and that's the C ratio right here, and that's to prevent you from being liquidated in any type of severe market fluctuation. And so say the price of your asset completely drops, then you won't be completely liquidated, and you have to maintain that by either adding to this or burning some. Once you kind of get some SNX tokens in there and you pull some SUSD out, and then you start trading it, you can kind of start to get a feel for how it works. So it's really hard to explain it unless you actually do it. But then you can keep track of that C ratio to make sure it's above 600 or above right here. And you can only pull out as much SUSD as allows that maintains that 600% above collateral. So say you put in $1,000, the max I think you can pull out is like $400, because you have to or something like that, but you have to maintain 600%. All right. This stuff is really hard for me to talk about, so don't use me as your only source for this. I mean, obviously I'm just giving you tools to try to learn about it. Anyway, with that in mind, maintain that collateral rate, go in here and play with it and try to learn these levers and pulleys here, and the entire system is backed by SNX token. So if one person gets liquidated, or if the price of something shoots through the roof, then everybody's debt increases, and everybody supports the debt together, so not one person is left with that. So that can be bad or good, but the benefit of this is every transaction that is made on the Synthetix exchange, which is now also the Quinta platform. So let's go to, hold on, let's see here. There's a light paper, how to short using Synth. I don't think we need to be shorting right now. Let's see. They renamed the Synthetix exchange to Quinta, and there's an entire discussion on this, and people got pretty heated, and it went back and forth. So you can either go to Synthetix.exchange right here, and you can trade all your stuff here, and then all the trades incur a fee, and then that fee gets contributed to all the people who have staked their Synthetix on there, and they earn those fees of everybody trading. Or you can go to this one, Quinta.io, which is the new decentralized Synthetix exchange and the rebranded one. And I guess they rebranded it because they wanted to demonstrate that you didn't have to just keep everything on Synthetix. Developers who want to build their own applications can plug in all the Synthetix tools into their own website and their own branding, and be able to add that Synthetix trading as some kind of option to their own trading websites, which is pretty cool, I guess. So say for instance that some exchange wanted to implement Synthetix trading into their exchange, they could put their brand on top of it and then allow Synthetix trading on their exchange. So so it's pretty cool. And anyway, this is Quinta. And that's the rebranded Synthetix exchange, and and any fees that would be acquired on this through any trades would go back to the people who have staked their Synthetix, and then you can lock up right here. It goes into escrow for a year, so any type of staking rewards accumulate here, and then after a year of vesting, you can pull it out. In the meantime, you can claim any of those rewards and add it into this escrow, and then over a year's time you can pull it out. So that's how that works. And right now gas prices is at 130 gwei, so it's pretty expensive. And like I said, layer 2 should be coming out to allow us little guys to learn to be able to use this tool effectively without losing our ass all over it. So anyway, if you want to, you don't have to just stake your synths on the Synthetix website. You go to Minter here as well, and here's where you can get a lot of your synths from. You mint your SNX token to SUSD. Okay, so stakers receive two kinds of rewards. Firstly, they receive SNX staking rewards, which are created through the inflationary monetary policy. Secondly, there's synth exchange rewards, which are generated by synth trades on Quinta.io. So there is an inflationary monetary policy to incentivize people to stake their synths on the platform, and then they also get the exchange rewards. So the inflationary monetary policy allows for some pretty handsome rewards as well. So I love saying that, pretty handsome rewards. What SNX stakers need to do. All synths need to be backed by staked SNX at a collateralization ratio of 750. Okay, I was wrong about the 600. SNX stakers need to manage their own ratio to be above this figure, so they need to either burn or mint tokens to keep that balanced above 750. And they can do so by burning synths to increase their ratio or minting synths to reduce it. If they do this, they can collect weekly rewards that vest for a year. I don't know why they just don't put that in a huge, because when I signed up for this initially, I thought, oh great, I can just pull out my rewards immediately. No, they have to sit there for a year. What are the risks? All SNX stakers create a debt when they stake. Their debt begins as the amount of SUSD they initially mint and fluctuates according to gains or losses made by other synth holders. Anytime anyone holds a synth that appreciates in value, that gain is distributed proportionally between all the staked SNX holders' debts. A staker must pay off their debt before they can unlock their staked synth. So that's kind of how that works. I did show you really quickly, it pulled up. Here's all the stuff on the synth network right now. Let me refresh this just to make sure everything's up to date. So there's $3 billion worth of trading volume in all these synths, so it's huge. There's $12 million in trading fees. 24-hour exchange volume is 37 million. There's been 48,000 trades. So here it shows trading volume. Average daily traders is 129. So it gives you all the stats so you can kind of see what you're dealing with. There's also iETH and iBTC synth tokens, and those track an inverse relationship, so you can make money by things falling in price as well. So if that's your thing, you can actually see here the total amount of synths and how they're divided out right now. Shorts and longs, there's not very many shorts as opposed to longs. And so, I mean, they have iDash, iUni, iEthereum Classic, iTron. So, and I is the inverse. And then the S is, so those are the shorts. And then the longs are the S, ETH, SBTC, S-Link. So those are the longs, and people anticipating that the price will appreciate. So there's not a whole lot of people that are anticipating that the price are going to go down, especially even in DOT, as you can see here. So those are the top 3 synths, are the Synth USD, Synth ETH, and Synth Bitcoin. And then they have a bunch of different options here. So yeah, that's that. Let's get in a little bit to the structure and the governance. I did pull up briefly for a second. Okay, so Synth started off as Haven, and it just started off as one particular stable coin, and so it was one synthesized stable coin pegged to the dollar. And they decided to branch out and create, they said, well, if we can do one stable coin, why can't we do a bunch of other things pegged? So they started adding in all these other different options like Bitcoin and Ethereum and gold and silver and all that. And then it became Synthetix, and they rebranded it. And it was a tough decision for them to rebrand from Haven to Synthetix. It's a tough decision for them to rebrand their Synthetix exchange to Quinta, but they're doing it, and it's worked so far. So there's a whole blog on all that. Here's their original Haven blog, funding protocol and tokenomics. And let's see here. This was their first Synthetix site. This is what I messed around with. I pulled it up on the Wayback Machine back in May. So they've made a lot of improvement on their website, as you can see. So yeah, it looks great. And they've set up a governance structure called the Quinta platform. You can get that here on dApps, and dApps is a pretty cool website. It's a whole website that just puts together all these Web 3.0 decentralized applications. So you can go through and you can discover tons. So view all these dApps. I mean, there's a lot of dApps here that you can. These are all websites and applications that are connected to your wallet and connected to the blockchain. So if you want to find some cool dApps, then this is a great place to go. And Quinta is on there. So here's their whole discussion of moving to Quinta. But let's find Spartan Council. So their governance has been created, and they've formed what's called the Spartan Council in order to make the decisions on these SIPs, which are like Ethereum. The EIP are decisions on the protocol made by the governance, and so they have the SIP, the Synthetix Improvement Protocol. So Ethereum Improvement Protocol, Synthetix Improvement Protocol. Bitcoin has one too, the Bitcoin Improvement Protocol, the BIPs. So here they did an SCCP, stands for Synthetix Configuration Change Proposal, and these are proposals about like smaller issues, and SIPs are proposals about larger issues. And so there's a whole format in order to be able to propose a SCCP, and you have to follow this format, and it shows you the preamble, simple summary, abstract, motivation, copyright waiver. I mean, in order to participate in all this, I would recommend getting into their Discord group, getting involved and all that stuff. They have an entire governance, all these SCCPs and SIP proposals that have been put forth. And we'll get into that in a second. Let's see here. This is derivatives. I wanted to find this one graphic here. Maybe I can find it here. Oh yeah, that's derivatives. Okay, so let me take this down. Whoops. Okay, so here's the graphic. Hold on, let me make sure. Okay, There's how their governance is formed. They have the Synthetix DAO at the core, which is the treasury owner, treasury allocation and spending oversight, the fund market making and fund protocol DAO, and the fund grants DAO. Then they have the protocol DAO. DAO stands for Decentralized Autonomous Organization, for those of you who don't know. And it moves out to the Synthetix contract owner that implements and approves the SIPs and SCCPs, manages core contributors, proposes SIPs and SCCPs and all that stuff, the technical executive emergency oversight. And then it goes out to the Spartan Council. I believe there's 19 of them, and they do technical change and improvement ownership, and they manage the SIPs and the SCCP submissions, and they vote on them. And then there's the grants DAO, and those are the treasury people, and they fund public goods and all that stuff, and they submit the SIPs. So you have to go through the grants DAO, through the Spartan DAO, and then it gets to the protocol DAO, and then finally makes changes to the Synthetix DAO. And then you have the ambassadors out here. They represent Synthetix in the community, and those are probably the people you initially talk to when you first get involved. And then there's the Synthetix community way out here, and they vote for the ambassadors, they vote for the Spartan Council members, they vote for the grants DAO members, and they support Synthetix in the greater DeFi space, and they propose the ideas and enhancements. So the great thing about cryptocurrency right now is it's possible for anybody and everybody to get involved if they want to. I am not involved in Synthetix in any way. I just hold some of the tokens, and that's it. So disclaimer there. I'm not sponsored by Synthetix or anybody at all. So everything I do on my show is 100% free form. It's one take. I don't have the time to sit around and edit because I got family and kids and work and all that stuff. So I study up and I lay everything out on the browser tabs, and then I try my best to talk about it all in one take, and that's just kind of what I do. All right. So back to this. You can see here a couple of the key. Let's see. So that timed out. Anyway, Kane Warwick and Garth Travers are two of the main people there. Justin Moses as well. So if you see them, you can find them on Twitter, and they're worthwhile people to follow. Let's see what else we have. Did I pull up? Token tax. So if you're buying and trading and doing all this stuff and staking up all these synthetic assets that are not even based on real assets, how is that going to be taxed? Token tax, I believe, is connected with Xerion, and Xerion is an app for you to keep track of all your wallets, your on the MetaMask wallets and whatever other types of wallets that you plug in there, and it keeps track of all your buys and sells, what you bought at, what you've sold at, and your gains and losses, profit and loss, and all that stuff. And it gives a little overview. Synthetix is a decentralized finance platform that provides Ethereum-based synthetic exposure to currencies, commodities, stocks, and indices. It was founded by current CEO Kane Warwick in 2017. You can trade ETH for SUSD, SynthSUSD. You can also borrow SynthETH as a loan. Holders of Synthetix tokens can use the Minter application to mint Synths using SNX as collateral and burn Synths to gain SNX tokens. You can also claim fees on the Synthetix networks by staking SNX tokens. So, how taxes work. Remember that all trades from crypto to crypto and crypto to fiat currencies are taxed. If you're new to crypto taxes, see our helpful introductory guide to crypto taxes in the United States and other countries. Trading Synths on the Synthetix exchange is taxable as capital gains or losses at the time of disposition. So even though you aren't trading real assets, those are still capital gains and losses. So keep that in mind. It can mean disposition can mean trading for Synth, trading for crypto, or selling in exchange for fiat currency. Trading SNX tokens for earnings is treated as interest income and reported separately on your taxes. So remember that. They say you can reach out to them. Minting Synths is from a tax perspective like borrowing crypto, so you don't recognize any tax when you mint Synths since you are using your SNX as collateral. However, you recognize any capital or gain or loss on your Synths when you exchange or burn them. SNX staking rewards and Synths trading rewards are taxed as income per their quantity and market value at the time you claim them. So then here they go, they're going and advertising their tax software. I don't have it, so I can't vouch for it, but it looks like it's pretty good, and it seems to have some pretty good reviews. So it might be something worthwhile looking into. So that's the taxes. Let's see whatever else we have for the time being. I think I've covered the basics. Let's see here. Chainlink, here's an article on Decrypt. Decrypt is an amazing news source for a bunch of stuff. They now power all price data for DeFi exchange Synthetix. This is from September 2020. I remember Sergey Nazarov talking about this early in 2020 or late 2019. Actually, it was late 2019. I was mowing my lawn listening to like Crypto 101 or something on Spotify. They were doing an interview with Sergey Nazarov, the CEO of Chainlink, and he was really excited to be getting involved with Synthetix. And here they are. Chainlink is now handling all Synthetix price feeds. Previously, Synthetix had their own in-house price feed, but that has become a problem and the bane of a lot of DeFi projects' existence because they have a lot of hackers getting in. For instance, Compound and Ren, or Compound had a huge price feed exploit hack in which they completely messed with it, and it really stabbed at the credibility of Compound. And they've had other price feed Oracle exploits, for instance on Fulcrum, BZB, something like that, on that DeFi platform, and that Fulcrum platform lost a lot of credibility. So Synthetix themselves, they suffered a price feed exploit hack, and that caused problems with them as well. So it messes with the integrity of the platform. So now they've handed that out over to Chainlink to fully decentralize all the price feeds coming in, so nothing can be exploited or hacked or controlled by any one entity. So it further decentralizes the platform. However, there's always kind of an ebb and a flow between centralization and decentralization in projects. And let's see here. Here's a little thing about Chainlink oracles. They have recently had $12 million raised, led by Paradigm, Coinbase Ventures, and IOSG. So these are VCs, venture capitalist firms, that are pumping money in and trying to become part of the Spartan Council and stuff like that. There's a debate right now going on whether they should allow this. People say many VCs don't add much value. The delta between quality VCs and the rest is quite large. And then other people say Paradigm has been helping the protocol recruit talent through their in-house HR network. They've also been actively helping think through our V3 planning, providing insights into approaches around our re-architecture. There's things for both sides. Having the sharpest minds applied to the hardest problems is part of the community's success, and we look forward to working closely with the new stakeholders. So do they really want all these really rich people to come in and try to buy their way into influence? It's always kind of an eternal struggle with all types of stuff. Let's see, here is some other piece of news. The raise comes from an initially productive period for Synthetix. The team recently announced the launch of synthetic Tesla stock, and SNX was among the tokens that filings show may be the next to be listed as a Grayscale investment trust. So if that happens, that's huge. A lot of Grayscale has been scooping up a lot of projects. They've scooped up Chainlink and Theta, and I think maybe even Dot, and then now Synthetix. So they've scooped up Aave. So yeah, a lot of good things are happening with this token, which can explain all this price rise that we have seen in the past year. I mean, look at that. I've made some really good money on the Synthetix tokens, the little bit of Synthetix tokens that I hold, and I'm happy I bought when I did way back here. So not financial advice and all that crap, but I think Synthetix is a great investment. If you feel the umption, go in there and try to learn the levers and pulleys of how all this works. Like I said, I can explain it all day, but to actually get in there and just stake your SNX tokens and start from there, and then just try to figure it out. But if you don't have a lot of Ethereum and a lot of cash to work with, it's probably not the best for those of us that are a little more cash strapped. So all right, I think that pretty much does it. It's got me at 44 minutes, so that's pretty long, but there was a lot of stuff to cover. There's a lot of moving parts to Synthetix, and You know, like I said, learn finance first, learn money, learn Web 3.0, learn about Ethereum, learn about Bitcoin and all this stuff before you jump into Synthetix. It is not a project for the newly initiated to the crypto world. All right, that being said, I will see you guys off, and let me get my cover photo back up there, and yeah, I hope you guys enjoyed this video. Leave me a like or something, or a subscription, and you'll see more of these videos, but the like helps the algorithm. And yeah, give me some feedback. Tell me I did crappy or tell me I did good. Tell me some things I left out or got wrong or whatever. And I'm always open and willing to learn from this stuff. All right, man. Well, I'll talk to you later. Bye.